Welcome to our channel. Investing in index funds is an excellent strategy for beginners seeking diversified, low-cost exposure to the stock market. Step 1. Understand that index funds are mutual funds or ETFs that track a specific market index like the S&P 500, providing instant diversification. Step 2. Choose a brokerage account by comparing platforms like Vanguard, Fidelity, Charles Schwab, or Robinhood, based on fees, minimum investments, and user interface. Step 3. Open your chosen brokerage account by providing personal information, employment details, and financial information. Step 4. Fund your account by linking your bank account and transferring money for investment. Step 5. Research popular index funds such as VOO or SPY for S&P 500 exposure, or VTI for total U.S. stock market coverage. Step 6. Compare expense ratios, which should typically be below 0.20% for index funds, as lower fees mean better long-term returns. Step 7. Decide between mutual funds and ETFs, noting that ETFs trade like stocks throughout the day, while mutual funds are priced once daily. Step 8. Place your order by searching for the fund's ticker symbol in your brokerage platform. Step 9. Enter the amount you want to invest or the number of shares you want to purchase. Step 10. Review and confirm your order. Then monitor your investment periodically without making emotional decisions based on short-term market fluctuations. Step 11. Consider setting up automatic monthly investments to build your portfolio consistently over time. Don't forget to like this video and subscribe to our channel.